Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian equity benchmarks fluctuate between gains and losses through the trading session. Bank Nifty leads the declines.
IndusInd Bank will be the first major lender to report their first quarter earnings today. This will be the first earnings report post the merger with Bharat Financial.
Infosys is expected to post better growth than TCS in the first quarter, but higher wage costs will impact the company's margins, just like TCS.
The NCLAT agrees to hear a plea filed by a Dutch court administrator after two separate insolvency pleas were filed against Jet Airways in two different countries.
All right, let's first take a look at how markets are faring. Yatin is here with us. Afternoon, Yatin.
Afternoon, Iran. If you look at the markets at this point in time, almost flat as it can be. However, despite the flattish market condition today, we have the advance decline ratio, which is slightly healthier. Almost 3 advances for every 2 declines as far as Nifty 50 is concerned. What's gaining in trade is select pharmaceutical stocks as well as metal stocks. So we have Tata Steel and Vedanta gaining by nearly 2.5 to 3% on good volumes. Sun Pharma as well as NTPC are the other gainers as far as Nifty is concerned at this point in time. What's weak in trade is Wipro. Of course, there are various uncertainties regarding the buyback program post, the proposal of the finance minister regarding, 20% tax. So that stock is quite nervous. 2% down for that one. 260 is where that stock is trading at. Axis Bank, L&T and Bajaj Finance are the other stocks which are the top losers on the Nifty at this point in time. In terms of active securities by volumes, we have, Dish TV as well as Reliance Infra. Both of these stocks are gaining by nearly 3.5%. Similar is the case with, PFC and Indigo. Both of these stocks are in action for the week. Almost on good volumes, PFC is up 1 percentage points after the recent correction that we saw. And in IndusInd Bank as well as Infosys, the two stocks ahead of the earnings are almost up by 0.5% each.
All right, just a quick mention of the bond markets as well, because in the bond markets, yields continue to fall lower. So you've got the 10-year benchmark bond now trading below 750, 747 or so. This is the lowest level since about August of 2017. The decline in yields obviously, has been going on since the RBI has been cutting rates, but the precipitous decline has come after the government said that they would look to take some of their borrowings offshore. But what's interesting is to look at what this fall in the benchmark bond yield is doing to the rest of the market. Now, if you remember, about a month back, we'd flagged off two problems in the bond markets. One was that the term premium was too high. So as you can see on that curve, the yield curve is now starting to flatten a little bit, and the term premium has started to come off. So that's one positive thing for sure. But unfortunately, this decline in the government bond yields is not yet reflecting on the corporate side. So the next chart will show you the fact that corporate spreads have continued to remain wide, even though government bond yields have come off. So one problem is getting resolved, which is the high term premium, but the other problem, which is the high corporate credit spreads, that continues to prevail.
The NCLAT has agreed to hear a plea filed by a Dutch court administrator after two separate insolvency pleas were filed against Jet Airways in two different countries. Arpan Chaturvedi now joins us on the phone line with the details on this one. Arpan. Okay, we seem to have lost that line. We'll come back to him in just a bit, but this is the story on Jet Airways, on how the National Company Law Appellate Tribunal has agreed to hear a plea by a Dutch court administrator. This comes when there were two separate insolvency pleas were filed against Jet Airways, and this happened in two different jurisdictions. And it remains to be seen if the NCLAT will actually hear this plea by the Dutch court administrator. Arpan Chaturvedi has been tracking the story for us. He joins us on the phone line. Arpan, what do we know?
That's right, Harsha. So the Dutch court administrator came to the NCLAT against the NCLT order, which had declared the insolvency proceedings, which were going in the Netherlands court as null and void. What the NCLAT today has said, they have not passed any orders, and what they indicated that they're going to look for is a way to get the parties to cooperate. And the NCLAT says that they will explore if there can be a way out where the interest of all the creditors, including the offshore creditors, can be protected. So after that, of course, in the order, the NCLAT has issued notice to the State Bank of India, which also issued notice to the resolution professional, and they have asked all the parties in the case to indicate and come up with what they believe can be the right procedure to go about this particular case because it involves insolvency proceeding against the same company, which is going on in two different companies, which is also why the NCLT Mumbai order, till the point that it talks about declaring the Netherlands proceeding as null and void, has been stayed.
All right, Arpan, thanks so much for that. Let's move on. Indians have to spend a bigger proportion of their income to buy houses. An RBI survey conducted among 13 cities shows prices as a proportion of monthly income have been rising for the last 4 years. Vishnath Nair joins us with the details. Vishnath.
Right, Ira. So as the RBI data says, the house price to the monthly income ratio has gone up from about 56 points to more than 61 points, and that indicates that houses are becoming far more expensive as opposed to the monthly income of these homeowners. What the RBI's survey also says is that the median house price, the LTV ratio for the entire lending system has also gone down in the last 12 months. That is between March 18 and March 19, especially in the case of public sector banks, private sector banks, as well as HFCs. This ratio has come down. Only foreign banks saw some of their LTV ratios go up, but that is still, overall they are still giving out loans lower loan to value ratios as compared to some of the other lenders in the system. The survey also points out to the median EMI to income ratio, which has remained largely flat over the last 2 years, between 37 and 38%. However, in cases of cities like Mumbai, Pune and Ahmedabad, this ratio has gone up. So overall, what the RBI is saying is that people are paying more to buy houses in these 13 cities that the RBI tracks as part of this survey.
Vishwanath, thank you for that. IndusInd Bank will kick off earnings today. More importantly, the private lender is expected to report consolidated numbers with Bharat Financial post the merger completion this month. Shefali is standing by with the key numbers to watch out for IndusInd Bank.
Well, for IndusInd Bank, we are looking forward to the merged numbers along with Bharat Financial. So this is the first time that they'll be doing that. So we are factoring in net interest income figure of about 2850 crore rupees. That'll be a growth of about 34% on a YOY basis, and a profit figure of about 1235 crore rupees. That'll be a growth of about 20%. On the higher side, some of the analysts are expecting that number to be as high as about 1350, 1400 odd crore rupees. So we'll see where the surprise could actually come in from. We'll certainly be looking forward to the margins figure, because the expectation is that the high yielding book of Bharat Financials is expected to boost the margins figure for IndusInd Bank. Other than that, all eyes would also be on the asset quality, because the management had guided or had said that the exposure to some of the stressed names, including one in media, one diversified group and one in the infrastructure group, all that put together was 1.9% of their total book. So what has happened to that number, whether there has been any update with regards to the status of those accounts. As of Q4, all those accounts were standard accounts. So we'll see how those accounts have been treated. And in Q4, no provisioning was made against those accounts, no prudent provisioning as well. So we'll see whether bank has done any of that in this particular quarter. Their provisioning coverage ratio was 43%, much below the ideal ratio. So whether the bank has beefed that up, that'll be important to see, because again, the expectation was that with the capital that they'll get in the form of, because of the merger with Bharat Financial, they'll use some of that capital for increasing the provisioning coverage ratio or to make the contingent provisioning, and hence, improving the provisioning coverage ratio. So we look forward to that. Other than that, basic numbers, loan growth seen around 33%, deposit growth around 28%, and it was a good quarter in terms of treasury gains as well. So how much that has happened in this quarter, which in turn has led to how much improvement in the other income. So that number as well we'll be looking forward to from IndusInd Bank today.
All right, Shefali, thanks so much for that. The second largest IT company in India, Infosys, will report June quarter earnings today. The tech giant is expected to report steady revenue, but margins are likely to be under pressure. Agam Vakil is standing by with what the markets are pricing in. Agam.
So seasonally, the first quarter is supposed to be a relatively strong one for the Indian information technology sector, and it may not be very different for Infosys either. In terms of expectations, we are likely to see about 2.5% growth in dollar revenues. In rupee terms, we're expecting a 1.3% uptick. We are certainly expecting a contraction in EBIT margins coming in at around 20.5 against 21.4%, and net profits consequently could decline by as much as 8.5% to around 3,737 crores. Now, in terms of the top line, we do know of the several deals that the company has signed over the past 12 months, and that is something that will continue in this particular quarter too. Well, we are expecting a constant currency growth of around 3% quarter on quarter. Now, the company has guided for a 7.5 to 9.5% in terms of revenues in constant currency for the full year, and the street is not expecting the company to change this, at least at this point in time. We do know that there has been some sort of volatility in the retail segment, and we've seen some weakness in TCS when it comes to the BFSI segment. But on the other hand, Accenture has reported some strength there. So it's going to be mixed cues when it comes to Infosys specifically in terms of the BFSI vertical. But it is the margins which are going to be important for this company. As we have seen in the case of TCS, Infosys will also see a contraction in margins, and to a certain extent this will be because of wage hikes as well as higher visa costs. Let's not forget that the rupee has appreciated against the US dollar, and that may also work against margins in this particular quarter. But partially, this may very well be be contracted by the cost control measures and high utilization, which will partially offset contraction in margins. In terms of what we are keeping an eye on, of course, is going to be client budgets. We have an idea from Gartner as well as ISG that there has been a slowdown in legacy businesses, and that is something that we will ask the management too. We're also keeping an eye on development of proprietary software, something that Infosys has been talking about of late. On the whole, we're expecting strength in revenues, but also contraction in EBITDA margins for Infosys.
Agam, thanks for that. It's not just Indian banks, even foreign lenders to Essar Steel are unhappy with the NCLAT verdict, and this might hurt foreign investment in India's bad debt market. Denise Wee of Bloomberg News now joins us from Hong Kong to tell us why. Denise, thanks so much for joining in. Why are investors unhappy with this decision?
Well, Essar Steel has been a real test case for the Indian insolvency system. And in this case, investors are unhappy because it's been a huge surprise, the judge's ruling that senior secured creditors get the same returns, roughly, as operational creditors, which are mostly unsecured. So this has come as a big surprise to investors who have not been, expecting this, and they're really unhappy about this. So one fund I spoke to, SC Lowy, said they're going to appeal the decision. And I guess so that will have to go through the Supreme Court as due course. But basically, investors did not expect this, and it's coming as a complete surprise.
What kind of impact is this likely to have on investment decisions into India, you think?
Well, I think investors like predictability, and this is not predictable. It's not an outcome that they were expecting. So in the short term, I think it's definitely going to, slow down investments into India's NPLs at a time when the banks are trying to clean up their bad debt. So I don't think that's going to be helpful for them at the moment. And also, funds are also sort of saying that they're going to reconsider investments. So I think that's something to watch definitely in terms of the slowdown on NPL investments.
Denise Wee, many thanks, Denise, for joining us with those details.
All right, in addition to the teething troubles in India's bankruptcy code, conflicts with other regulations and regulatory bodies are added hurdles to the insolvency process. Upmanyu Trivedi of Bloomberg News standing by to explain why.
Yeah, that's correct. Basically, regulators like Securities and Exchange Board of India and Anti-Money Laundering Agency like Enforcement Directorate and various arms of the Revenue Department have been filing a spate of cases rising out of insolvency cases where they are basically trying to hinge on to their powers of seizure and sale of assets of companies who have violated their laws, for instance, securities laws or money laundering laws or tax laws. So now what is happening in these cases is that the bankruptcy court or the higher courts of appeal and Supreme Court, they've been giving a stay either on the whole bankruptcy process, which stalls the resolution of those bad loans, or they've been saying that those assets cannot be used for that particular company's bankruptcy resolution, which again hinders it in an effective bankruptcy resolution, because those assets are not being utilized for for realizing highest value and highest recovery for the banks. So there has been a spate of cases filed by SEBI, ED, Sales Tax Department, Income Tax Department, which has been giving rise to these issues, and experts believe that such cases will only delay bankruptcy resolutions, and Supreme Court will have to take a decision for once and not all. And in one such case where Supreme Court had to take a decision, the court in HBN Dairies and Allied case where SEBI had moved the Supreme Court today deferred the case by another month for final hearing.
Upani, thank you so much for that. Temasek is looking to invest in India's startups as they find more growth opportunities there. In a conversation with Sajid, the co-head of Temasek India, Ravi Lamba, explained why half of their India portfolio is focused on financial services.
I think we are, firstly, to step back, we are very bottom-up focused on our investments. So we will look at investments on a bottom-up basis. What does that mean? We do not allocate money to any geography or any sector globally. So it's entirely bottom-up. So where we see value, we will put capital to work. India, we see value, we see positives in India. We see positives along policy reform. We see positives around the economy, digitization of the economy. We see, trends playing out in India that we like thematically. For example, the sharing economy. Sharing economy, also connected world, that's playing out well here. There's the urbanization that goes on, the middle income population spending power going up. So all of that, from a macro perspective, we see good tailwinds that tell us that India is a good area for our capital to find a good destination. Now, when it comes to finding good opportunities here, we are obviously focused on good management, and we are focused on finding businesses that differentiate. And we've been putting $1 billion a year for the last 5 years, as you rightly said. We are at 11 billion now, that's all-time high. We're at 5% of our global portfolio, which was 313 billion as of March 19, which also is a record high for India exposure. And I dare say, as we go forward, could we put more capital here? Our answer is absolutely yes. Are we focused on it? Yes.
Even if returns are going to be slow to come back?
So when I talk about a low growth environment, I talk about a low growth environment globally because of rates, because of cycle, etc. So economic cycles and because of uncertainties and volatilities, all of that put together, we are saying there's going to be we're heading into a low growth environment, and we're not the only ones saying it. This is a broad consensus. But when it comes to finding opportunities, obviously we're trying to find opportunities that are not growing slowly. We're trying to find opportunities that are generating, alpha in our equity. And India, as a destination, we find plenty of opportunities to look at. So no, we're not targeting to put capital in India because we're targeting to put capital in India because we see growth coming out of our investments in India, and it's not low. We're talking at normal sort of spreads over cost of capital.
One of the startling thing about your India portfolio is that more than 50% is in financial services in India. And when I compare it to your global sector allocation, it's around 25% in financial services. What makes you bullish on financial services, especially in India?
Yeah, that's a great question. I think, in the early days when we set up our India business, a lot of our investments went into telecom and the banks. We saw both those sectors as a proxy for growth of the economy, banks more so. So if you think about banks, we see them as a proxy for growth. And that's typically how in China, we did the same thing. We first went into the banks. Then each specific sector below that, below the banks started developing and maturing. So we could go directly into that sector. Healthcare developed, FMCG developed more, retail developed more, technology developed more, so then we can get direct exposure. So we have exposure in the banks, in China and in India for that matter, and we started investing more in the underlying sectors. As they mature and they become more, what I would say, ripe for investment, we can put capital directly. Until then, we are happy to play the economy through the banks as a proxy. China has moved far along that. The early growth companies, the startup businesses in China, etc., are further ahead. So we've been able to, for example, circulate more capital into those and play the growth of China in that respect. In India,
you have
the
26% exposure to China.
Yes, 26 exactly. So almost 5 times of what we have in India. But more importantly, in India now we're seeing last 4 or 5 years we're seeing the startup economy as an example getting to be a lot more interesting, a lot more opportunities. So now we're putting more capital there. So I think it's a journey. So we have not targeted to say we want to be more infinite banks in India. It is just bottom-up built. As we see the opportunities, we keep growing the portfolio.
All right, it's England versus New Zealand on Sunday. While we Indian fans may be disappointed in not making it to the finals, there are some lessons we can learn from the game. Neeraj Shah has drawn up a list of what the World Cup has taught investors. Neeraj.
Well, thanks for that, Ira. So, yeah, as I believe every sport teaches something about life and investing as well. So I just drew a few key moments from this World Cup and tried to draw parallels as to whether the investing world had instances which you can take some lessons about as well. So firstly, the first one that stood out for me, and frankly, everybody says this, fortune favors the prepared mind, right? Now, look at this match, and this is the league match that I'm talking about, not the semi-final, but the league match. England put Australia to bat. The ball was fizzing around. The bowlers are bowling very well. It missed the edges a number of times. But Warner, as well as Aaron Finch, stuck to the task. They knew that if they passed the first half an hour, 45 minutes, then the sun would come out and then they'll be able to bat even more freely. And who would have thought at that point of time, with the way England was bowling, that they would have a 123-run partnership. The lesson, frankly, is that if you know what your target is and if you can ride through the tough times, then the good times could come in. And frankly, it happened with a bunch of stocks which got hit during demonetization. Everybody thought that the world would fall apart for Maruti, Bajaj Finance, and some of the others. They went down and then they came back very, very smartly. So, well, one of the lessons, frankly, fortune does favor the prepared mind. The next one, you can't write off the mercurial teams or the mercurial, but you definitely can't bet on them for long-lasting results. Now, I'm using Pakistan as an example out here. When India beat Pakistan, all seemed to be lost. But Pakistan said, hey, no, we can always bounce back. And the bounce back they did. They beat England, the finalists. They beat South Africa, one of the favorites. And they beat New Zealand, the other finalists. And nobody would have thought that this would have happened. But Pakistan did that. However, they did not make it to the semi-finals. So while in patches they perform well, they probably couldn't last the distance. And that's what happens to a lot of stocks. Use so many mid-cap names, Delta Corp, Sterlite Tech, etc., come out with fabulous quarters once in a while, but somehow don't create wealth for investors. Both these stocks are down at least 50% from the highs that they made. Also, don't try and predict Mr. Market. That's the simple thing. And England lost to Australia, or you look at a lot of other parallels as well, and you will realize, everybody thought that England would be the team to beat. They lost to Australia, they lost to Pakistan, they lost to a couple of other teams, and suddenly everybody thought, oh my God, the one that was expected to ride all the way might even get knocked out of the World Cup. But they also made it to the finals. So don't try and predict Mr. Market. Don't try and predict things. This was one lesson that the World Cup taught investors as well. Take even the smallest competition seriously. Don't be oblivious to the smallest changes in the business environment. India's loss to New Zealand tells you that story. Everybody thought it was a done deal. India will win. India did not. Everybody thought that South Africa would steamroll Bangladesh. South Africa did not. And that's what's happening with a bunch of companies. Page Industries, Symphony, small competition in terms of DKNY or Van Heusen, or in case of Symphony with Voltas and Havells, and those prices have just come off materially. So that's the other problem. Last but not the least, quality across the world is triumphing, and we've seen that in the World Cup as well. You may argue that what is doing well and who did well and who did not. Rohit Sharma, Shakib Al Hasan from the batsmen, or Mitchell Starc, Jasprit Bumrah, all top guys, all have done well, and across the world, Germany, US, India, it's the quality stocks that are triumphing. So, well, that's the World Cup lessons for investors. I'll just end this with one last thing, which I usually do when I write such a piece, a life lesson. And I think there's no other big life lesson than Sanjay Manjrekar, frankly, coming out of this World Cup. Why go out and tell in a public forum that one guy is not good when the guy has the opportunity to come true? And Ravindra Jadeja proved it, right? Manjrekar called him a bits and pieces players. Jadeja came out, did a fantastic semi-final, and then Manjrekar had to take his words back. He mentioned this earlier, and then he had to come back and say the bits and pieces player is by bits and by pieces, bit by bit, tearing me to pieces. and he had to eat his words. So a bit of a life lesson as well, I guess.
We could have done well without that emoji when he said well played.
Yeah, a lot. He came in a lot of criticism for that as well.
Thanks, Neeraj, for that. Interesting one, that. The Supreme Court, meanwhile, has decided to refer the Karnataka rebel MLA's plea to the Constitution Bench. 11 sitting Karnataka MLAs have moved the Supreme Court after the Assembly Speaker refused to accept their resignation. The MLAs met the Speaker on Thursday, but no decision on the resignation has been taken so far. The next hearing has been scheduled on Tuesday.
That's a wrap on this edition of Power Lunch. Thanks so much for watching.
Thanks for watching.